Before he lost everything, all $20 billion, Bill Hwang was the greatest trader you'd never heard of. He drove a Hyundai SUV. He lived in a $3 million house in New Jersey. He sat on a plastic chair on his porch like any other suburban dad. Every Friday morning at 7 a.m., his employees gathered in the Midtown Manhattan office. They listened to Bible recordings over coffee and Danish pastries. Isaiah, Lamentations. This man secretly controlled $160 billion worth of stocks, more than the GDP of most countries, and nobody knew. This is how Bill Hwang almost broke Wall Street in 48 hours. The Man. New York, 1996. Bill Hwang was born in South Korea in 1964, son of a Protestant pastor. The family moved to America when he was 18. His parents took factory jobs in Las Vegas to survive. He studied economics at UCLA, got his MBA at Carnegie Mellon, worked his way up to Tiger Management, one of the most respected hedge funds on Wall Street. His boss, Julian Robertson, considered him one of the best. When Robertson closed the fund in 2000, he gave Hwang $25 million to start his own, Tiger Asia Management. At its peak, $5 billion. Then it all went wrong. In 2012, Hwang pleads guilty to insider trading of Chinese bank stocks, pays $44 million in fines, gets banned from trading in Hong Kong. Most careers end here, but Hwang doesn't disappear. He converts his fund into a family office, Archegos Capital Management. The name comes from the Greek word used in the Bible to describe Jesus Christ as the author of salvation. He commissions a massive painting for his office, the blood of Christ washing over the New York City skyline, cleansing the great metropolis of its sins. He tells his employees that investing is divine work, that setting a fair price for stocks is honoring to God. He believes it. The timer starts. The Weapon. March 2020. Manhattan apartment COVID lockdown. Hwang is stuck at home like everyone else. But while the world watches Netflix, he is building something. He starts accumulating massive positions in a handful of stocks. Viacom CBS, the media giant behind MTV, Nickelodeon, Paramount. Discovery, GSX Takedo, Baidu. But he doesn't buy the stocks directly. He uses a financial instrument called a total return swap. Here's how it works. You go to a bank, you say, give me $1 billion of exposure to Viacom CBS. The bank buys the shares and holds them on its own balance sheet. You pay a monthly fee. If the stock goes up, you keep the profit. If it goes down, you cover the loss. The crucial detail, you never own the shares. The bank owns them, which means you never have to disclose your position to the SEC, the federal agency that monitors U.S. financial markets. Nobody knows you're involved. Hwang does this with 6 banks simultaneously: Credit Suisse, Nomura, Goldman Sachs, Morgan Stanley, Deutsche Bank, Wells Fargo. Each bank sees only its own piece of the puzzle. None of the 6 knows about the other 5. Each bank thinks Hwang's total position is manageable. Each bank gives him more leverage than it should. By early 2021, Hwang controls positions worth $160 billion. With roughly $20 billion of his own capital underneath it, 8-to-1 leverage, sometimes more. He owns more than 50% of Viacom CBS, more than 50% of GSX Takedo. Think about what that means. When you own more than half of a company's shares, you are the market. When Hwang buys, the price goes up. When Hwang sells, the price crashes. He doesn't just bet on the market, he moves it. But on paper, officially, he owns nothing, because the shares belong to the banks. Not to him. Nobody knows. Not the SEC. Not the other shareholders. Not the companies themselves. Let's pause. 3 concepts. Essential. 1. Leverage. Imagine you have $10. You go to the bank. The bank lends you another $90. Now you have $100 to invest. If your investment goes up 10%, you make $10, doubling your money. If it goes down 10%, you lose $10, everything you had. If it goes down 11%, you owe the bank money you don't have. That's called financial leverage. You control far more than you actually own. Gains multiply. So do losses. Hwang had $20 billion of real money, but thanks to total return swaps with 6 different banks, each unaware of the others, he controlled $160 billion in positions. How? He goes to Bank A, uses his $20 billion as collateral. The bank lends him another $20 billion. He controls $40 billion. He goes to Bank B. It doesn't know about Bank A. Lends him another $20 billion. He controls $60 billion. He goes to Bank C. Doesn't know about the other two. Lends him another $20 billion. He controls $80 billion. He repeats this with 6 banks. None of them know the others exist. Each thinks it's the only one. Each thinks the risk is manageable. Result, $20 billion in real capital controlling $160 billion in positions. 8 times reality. 2. Total return swap. Think of it like renting a racehorse instead of buying one. The bank owns the horse. You pay to race it. If it wins, you take the prize money. If it loses, you pay the vet bills. But your name never appears in the ownership records. No disclosure, no reporting, complete invisibility. That's how Hwang controlled $160 billion without anyone knowing. The horses were everywhere. The owner was invisible. 3. Margin call. When you borrow money to invest, the bank sets a minimum threshold. It's called collateral, a guarantee that covers potential losses. If your investments fall below that threshold, the bank calls you. That's a margin call. They want more cash as collateral, immediately. If you can't deliver, they sell your positions to recover their money. But here's the trap. When they sell, the stock price falls further, which triggers margin calls at other banks, which triggers more selling, which triggers more margin calls. It's a fire that feeds itself. The more it burns, the more oxygen it finds. The peak. Early March 2021. 1 week before everything collapses, Hwang gathers his staff. He has a vision. He wants to grow Archegos to $100 billion in assets under management. The staff applauds. He sends a message to a colleague about a stock that is rising. "It is a sign of me buying," he writes, with a laughing emoji. Federal prosecutors will later use this message as evidence of market manipulation. Hwang doesn't see it that way. He believes he is doing God's work. He is about to find out the market doesn't care. The collapse. March 22nd to 26th, 2021. Monday, March 22nd. Viacom CBS announces a new stock offering. It issues new shares to raise cash. Here's why that matters. When a company issues new shares, the existing ones become worth less. More slices mean each slice is smaller. The stock price starts to fall. At Archegos, red alert. Hwang's response, buy more. Just keep working the orders, he tells his traders. In a single day, Archegos buys $900 million worth of Viacom CBS stock, trying to push the price back up. It doesn't work. Tuesday, Wednesday, Viacom CBS keeps falling. Discovery follows. GSX follows. Everything follows. The banks start calling, margin calls, more collateral. Now, but Hwang has nothing to give. His $20 billion in real capital was already fully committed as collateral with all 6 banks. There is nothing left. The only alternative would be to sell positions to raise cash. But selling would push prices down further, which would generate more margin calls, which would force more selling. It's exactly the trap described earlier, and Hwang is caught inside it. Thursday evening, Goldman Sachs figures out what is happening. It calls the other banks and proposes a coordinated solution. Everyone sells slowly together to minimize damage. Credit Suisse hesitates. Morgan Stanley doesn't wait. By Thursday night, Goldman and Morgan Stanley have already started selling quietly. Friday morning, the market opens and the selling begins in full force. Massive block trades appear on the market out of nowhere. Traders across Wall Street stare at their screens. Viacom CBS down 10%, then 20%, then 30%. Discovery crashing. 10 other stocks crashing. Nobody understands why. An Archegos staffer is standing in an airport security line, shoes in hand, on the phone with panicked banks trying to stop the avalanche. A Credit Suisse trader grabs a city bike on his day off and pedals furiously to the office to untangle billions in positions. By Friday's close, the firm that was worth $36 billion at the start of the week is worthless. By Monday, it's over. $100 billion in market value. Gone. In 5 days. The casualties. Credit Suisse loses $5.5 billion. Nomura loses $2.9 billion. Total bank losses, over $10 billion. Archegos employees, who had 25% of their bonuses tied up in the firm, lose $500 million in deferred compensation overnight. Some put their homes up for sale. In the chaos, a clerical error sends nearly $500 million to the wrong account. A junior Goldman Sachs manager receives a desperate call from a collapsing Archegos begging for the money back. Archegos staff receive a Zoom invitation. They log on. The message is brief. The firm that was worth $36 billion on Monday is shutting down immediately. Credit Suisse, already weakened by years of scandals, never recovers from the $5.5 billion hit. 2 years later, it collapses entirely. 158 years of history. Acquired by UBS in a forced weekend rescue. Hwang is arrested in April 2022. Convicted in July 2024 on 10 of 11 criminal counts. Fraud, racketeering, market manipulation. Sentenced to 18 years in prison in November 2024. Currently free on bail pending appeal. Epilogue. Today, 2026. The house in Tenafly, New Jersey is quiet. The painting of Christ washing the sins of New York, somewhere in storage. At a conference last month, a fund manager shows you his portfolio. Concentrated positions, high conviction. We use swaps for efficiency. You look at his spreadsheet. 5 stocks, massive leverage, 6 different prime brokers. How much does each bank know about the other's exposure? You ask. He looks at you like you asked a stupid question. That's not how it works, he says. You close the spreadsheet. Good luck, you say. His countdown has already started. Bill Hwang grew Archegos from $1.5 billion to $36 billion using hidden leverage in 6 banks that didn't know about each other. In 5 days in March 2021, $100 billion in market value was wiped out. Global banks lost over $10 billion. Credit Suisse, 158 years of history, collapsed 2 years later. Bill Hwang was sentenced to 18 years in prison in November 2024. He is currently free on bail pending appeal.